Well, when it comes to the coronavirus and retail, it's complicated. The country, China, critical for both manufacturing and for its consumers. So even though rising wages and then the trade war have given financial incentive to move production outside of China, it still remains a key manufacturing location for many companies. Separately, as the Chinese consumer spending power has grown, so is the opportunity to sell more in that country. Retailers and brands are starting to quantify the impact of the coronavirus on business. Canada Goose is perhaps one of the hardest hit brands. That stock already down more than 15% year to date. Cowen & Company estimates up to 40% of Canada Goose's revenue is tied to China from direct revenue from Chinese tourists and then in other countries where Chinese tourists are buying there. And that's not happening if there's travel restrictions in place, which they are currently. Canada Goose says that China sales are negligible levels across the entire store network and Tmall. So that's the major e-commerce platform as well. Now, Tapestry, that's the parent company of Coach, Kate Spade, Stuart Weitzman. It produces less than 10% of goods in China, but is estimating that the virus will cut up to $250 million and up to 45 cents in earnings because most of its China stores are closed. Like Tapestry, Capri Holdings, that's the parent of Michael Kors, Versace, Jimmy Choo. That company estimates a bigger hit to sales than to its supply chain because a quarter of total revenue is in Asia. More than half is in China. Capri has 150 of 225 mainland China stores closed and says that the ones that are open are seeing traffic and sales severely reduced. It's estimating a $100 million reduction in revenue and a profit hit of 45 cents to share. Up to 45 cents a share. Now, half of Ralph Lauren's 110 stores in China, those are closed too. And that region is a key growth area for Ralph Lauren, but only about 4% of the brand's revenue is currently in that country. So perhaps a blessing in disguise, but 20% of its product is made in China. Now, half of Nike's China stores are closed, and open stores, those are seeing lower traffic. It's expected to have a material impact on results. Telsey Advisory Group estimates China is Nike's most profitable region, generating 17% of total sales in the last 12 months.